Welcome back to the Market Deep Dive. It is Sunday, December 28th, 2025. I'm your host, Joe, and I have to say, Jane, if you told me back in January that we'd be sitting here today talking about silver knocking on the door of $80 an ounce, I probably would have laughed you out of the room.
I think a lot of people would have, Joe. It's great to be back. I've been staring at the charts all weekend, just trying to wrap my head around this move. I mean, we closed Friday at, $79.30? That is absolutely astronomical considering where we started the year.
Exactly, $79.30. That's a 3.7% gain just in the last week of the year, usually a quiet time for markets. But 2025 hasn't been a normal year for commodities. We are looking at a year-to-date gain for silver of roughly 158%. To put that in perspective for our listeners who might be used to the stock market's 10% average returns, silver has outperformed the S&P 500. It has crushed Bitcoin, and it has even left gold in the dust, despite gold hitting its own record of over $4,500.
That's actually the first thing I wanted to ask you about. We always hear silver called poor man's gold or gold's volatile little cousin. But this year, the cousin took over the family business. Why is silver outperforming gold by such a massive margin right now?
It's the classic slingshot effect, Jane. Think of the gold-silver ratio as a rubber band. When that ratio gets stretched too high, meaning silver is too cheap relative to gold, it eventually snaps back with violence. Back in April of this year, that ratio was over 100. It took over 100 ounces of silver to buy 1 ounce of gold. Today, we are looking at a ratio in the mid-60s. The rubber band didn't just snap back, it's practically flying across the room.
So it's partly just a mathematical catch-up game, or is there something fundamental changing in how the market views silver versus gold?
It started as a catch-up, but it evolved into a structural repricing. See, gold is money. It's a safe haven. It rallied because of the de-dollarization trends we've seen, central banks buying hand over fist, and geopolitical messes like the recent U.S. blockade of Venezuelan tankers. But silver? Silver is a two-headed beast. It's monetary, yes, so it drafts off gold's success, but it's also an industrial metal. And the industrial story in 2025 has been, frankly, explosive. That's the engine that took over in the second half of the year.
Right, I keep reading about industrial demand in the headlines. Is this just the solar panel story again? I feel like we've been hearing about photovoltaics for years. What made 2025 different?
It is the solar story, but it's the solar story on steroids, Jane. Let me give you an analogy. Imagine you have a bakery. That's the silver mine supply. For years, you had a steady line of customers buying bread, but suddenly a new customer walks in. Let's call him Mr. Solar, and he doesn't just want a loaf. He wants to buy 30% of everything you bake every single day, and he's never full. In 2025, the solar industry's appetite for silver didn't just grow, it morphed. We shifted to these new TOPCon solar cells, which require 50% more silver than the old PERC cells. So not only are we installing more panels globally, over 1,500 gigawatts of capacity now, but each panel is using more silver.
Okay, that bakery analogy helps. So Mr. Solar is eating more bread. But what about the other customers? We still have electronics, electric vehicles, and AI, right? I read a report from the Silver Institute claiming AI is now a major demand driver.
Spot on. The AI revolution isn't just about software, it's hardware intensive. Data centers, high-performance chips, the complex circuitry needed for 5G and 6G infrastructure, silver is the most conductive metal on Earth. You can't replace it easily without losing efficiency. So while solar is the big headline, the electrification of everything, from EVs to AI servers, is creating a floor of demand that just wasn't there a decade ago. An electric vehicle uses 25 to 50 grams of silver. A traditional gas car used maybe 15. Multiply that by millions of EVs and you see the problem.
The problem being supply, right? Because if demand is skyrocketing, usually basic economics says supply should increase to meet it. Why aren't the miners just digging up more silver? If the price is $80, surely they are incentivized to flood the market.
You would think so, but mining doesn't work like a light switch. You can't just flip it on. This is what we call the supply inelasticity of silver. Most silver, about 70 to 80%, is a byproduct. It comes from mining copper, lead, or zinc. Miners aren't digging for silver primarily. They are digging for copper, and they get some silver as a bonus. So even if silver goes to $100, a copper miner isn't going to double their production if copper prices are just stable. They are constrained by the primary metal.
That is fascinating. So the silver price signal doesn't actually trigger more silver production because it's just a byproduct for most of these companies.
Exactly. And for the pure silver miners, the few that exist, they are dealing with aging mines. Look at the data from 2025. Global mine production is estimated to have fallen by over 7% since 2016 levels. We are seeing depletion in major regions like Peru and Mexico. Grades are falling, meaning they have to dig up more rock to get the same amount of metal. We are in the 5th consecutive year of a supply deficit. The estimates for 2025 put the deficit between 95 and 117 million ounces. That is a massive hole to fill.
So we are consuming more than we produce for 5 years straight. Where has the extra silver been coming from then? We haven't run out yet.
Great question. It's coming from above ground stockpiles. Think of it as the world's savings account of silver. We've been draining the vaults in London and Shanghai. In fact, one of the scariest charts I saw this week showed inventory at the Shanghai Futures Exchange hitting a 10-year low. It's down something like 86% from the 2020 peak. We are scraping the bottom of the barrel. That is why you are seeing this price explosion now. The market has realized the buffer is gone.
That sounds incredibly bullish, almost like a squeeze. I saw a headline about a transcontinental squeeze driven by China. What's happening there?
China is the epicenter. They are the world's largest producer of solar panels. They need the physical metal. We saw reports that China exported a record amount of gold to buy silver, essentially swapping metals to feed their industrial machine. They were draining London vaults to ship metal east. When the physical users, the factories, start panicking about securing supply, the paper price on the COMEX in New York has to follow. That $79 price tag isn't speculation. It's a reflection of physical scarcity.
Let's pivot to the macro picture. We have this internal supply-demand squeeze, but what about the external factors? The Fed, inflation, the dollar. How much of this rally is just the dollar getting weaker?
It plays a huge role. The US dollar index, DXY, is trading near 3-year lows. We had the Fed pivot in late 2025, signaling they are worried about the economy slowing down. Markets are now pricing in 2 interest rate cuts for early 2026. When rates go down, the dollar usually weakens, and hard assets like silver and gold go up. It's the tide that lifts all boats. But remember, silver is rising faster than the dollar is falling. This isn't just a currency play, it's a scarcity play.
So if I'm an investor looking at this $79 price, I have to wonder, did I miss the boat? I mean, 158% gain in a year is huge. Is it too late to get in, or is this just the beginning of a super cycle?
That is the multi-trillion-dollar question. Let's look at the technicals. We broke out of a 40-year cup and handle pattern when we crossed $50. Historically, when an asset breaks a multi-decade resistance, the move is explosive and long-lasting. Some analysts, like those at FX Empire and even banks like UBS, are pointing to $100 as the next psychological target in 2026. However, we have to be realistic. The RSI, the Relative Strength Index, is reading near 88 on the weekly chart. That is extremely overbought. In the short term, a pullback to $70 or even $65 wouldn't just be normal, it would be healthy.
A pullback to $65 sounds terrifying if you buy at $80, but you're saying the long-term trend is still intact?